Do you want to get paid every month just for holding a few smart investments? Imagine receiving a paycheck, not from your job, but from your portfolio, all while watching your wealth grow over time. Sounds great, right? Well, that's the power of dividend investing. In today's video, I'm going to show you exactly how you can build a portfolio that pays you every single month using just 3 dividend-paying stocks. And the best part? These aren't just income plays. They also have strong growth potential to help you maximize your wealth. So, if you're ready to learn how to make your money work for you, hit that like button and subscribe for more investing tips. Let me know in the comments if you're already receiving dividend income or want to get started. Now, let's dive into these 3 dividend powerhouses that can make a big difference in your portfolio. Now let's talk strategy. Dividend investing isn't just about getting paid. It's about building a system that works for you over the long term. When you own dividend-paying stocks, you're essentially collecting a portion of a company's profits on a regular basis, just for being a shareholder. But what if you could get that income every single month? Here's where things get interesting. Most dividend-paying stocks don't pay out monthly. They usually pay quarterly. But by selecting stocks that pay on different quarterly schedules, you can actually set yourself up to receive payments every month of the year. It's like creating your own personal income stream without having to constantly buy and sell. Think of it this way. Stock A pays dividends in January, April, July, and October. Stock B pays in February, May, August, and November. Stock C fills in the gaps by paying in March, June, September, and December. By holding these 3 stocks, you've now created a system where you're getting paid every single month. But, as with any strategy, not just any stocks will do. You want to focus on companies that not only pay reliable dividends, but also have strong growth potential to keep your portfolio growing over time. In the next few minutes, I'm going to break down 3 stocks that fit this model perfectly, giving you both monthly income and long-term gains. Let's start with a pharmaceutical powerhouse, Merck & Company, MRK, a company that combines stability with long-term growth potential. With a massive market cap of $275 billion, Merck has long been a dominant player in the healthcare space. And even though the stock's year-to-date return is down negative 4.72%, this dip could be your perfect entry point for a long-term winner. Looking at Merck's performance over the past year, the stock is up 3.85%, and over the last 5 years, it has delivered a solid return of 34.94%. This kind of consistent performance, even through market fluctuations, shows the resilience of the company. And when you combine that with Merck's blockbuster drug Keytruda, which continues to drive revenue growth, the future looks bright. Now, here's the part that dividend investors love. Merck offers a healthy 2.84% dividend yield, with an annual dividend of $3.08 per share. But it doesn't stop there. Merck has been steadily increasing its dividend for 13 consecutive years, and with a quarterly payout of 77 cents, you're getting paid just for holding on to this blue-chip stock. One thing that might catch your eye is the high PE ratio of 60.29. This may seem high at first glance, but it's largely due to the company's significant investment in R&D and a future pipeline that could potentially lead to more high-revenue drugs, positioning Merck for long-term growth. Plus, with analysts expecting earnings to bounce back in the coming years, this valuation could start to make more sense as the company grows. Merck pays its dividends in January, April, July, and October, fitting right into our strategy for generating monthly income. With its dependable payout history and strong potential for both growth and income, Merck is a stock that checks all the boxes for dividend investors. So, if you're looking for a stock that combines reliability, growth potential, and a steady dividend stream, Merck could be the perfect addition to your portfolio. Now, let's move on to our second stock that will help you lock in monthly dividends. Next, let's dive into a brand that's as familiar as your morning coffee. Starbucks, SBUX. This global coffee giant not only keeps millions caffeinated, but also rewards its investors with steady dividends and long-term growth potential. Currently, Starbucks has a market cap of $109 billion, and while its year-to-date return is a modest 2.71%, don't let that fool you. Over the past 5 years, the stock has delivered a total return of 11.41%. This might not be the flashiest growth compared to some tech stocks, but Starbucks has the potential for long-term success, especially with its ongoing global expansion and recent management changes. Speaking of management, Starbucks recently appointed a new CEO, Laxman Narasimhan, who has a proven track record of driving innovation and profitability. While these changes take time to show results, Starbucks is positioning itself for growth by focusing on new store concepts, digital initiatives, and expanding into international markets. This could mean more steady returns down the road. Now, onto the reason why dividend investors love Starbucks. The company pays a quarterly dividend of 57 cents per share, which translates to an annual dividend of $2.28 and a dividend yield of 2.4%. Starbucks has been growing its dividend for 13 consecutive years, with an impressive 5-year dividend growth rate of 10%. While their free cash flow has taken a hit due to the pandemic, making future dividend growth a bit slower, the company remains committed to rewarding shareholders over the long term. From a valuation perspective, Starbucks is trading at a forward P/E ratio of 26.96, which is below its 5-year average of 31. That means, while the stock isn't exactly cheap, it could still be undervalued based on where it's historically traded, especially if the new leadership can successfully steer the company through its transition. As for dividend payments, Starbucks pays in February, May, August, and November, perfect for fitting into our monthly dividend income strategy. If you're looking for a reliable, globally recognized brand with a consistent dividend history and potential for future growth, Starbucks could be the perfect addition to your dividend portfolio. Now, let's move on to our final stock, which has even more exciting potential for monthly income. Finally, let's talk about a retail powerhouse that's undergoing an exciting transformation, Target TGT. With a market cap of $70 billion, Target is one of the key players in the retail sector, and it's starting to regain its momentum. After a few years of playing catch-up with competitors like Walmart, Target is staging a strong comeback, and this could be the perfect time to jump in. Let's look at the numbers. Year-to-date, Target's stock has risen by 5.74%, but the real highlight is its performance over the past year, a massive 40% gain, which shows that Target has serious momentum. Over the past 5 years, Target has returned 35.31%, further proving it's not just a short-term play, but a solid long-term investment as well. So what's driving this turnaround? Target has been heavily investing in its e-commerce platform and refining its operations to stay competitive in the digital age. They've been closing the gap with retail giants like Walmart, and much like Lowe's did with Home Depot a few years ago, Target has the potential to outpace its main competitor by focusing on efficiency and customer experience. Now, let's get to the part dividend investors will love. Target is not just a reliable payer, it's a dividend king, having increased its dividend for an astonishing 55 consecutive years. Currently, Target pays a quarterly dividend of $1.12 per share, which adds up to an annual dividend of $4.48, yielding close to 3%. And with a 5-year dividend growth rate of 11%, this is a stock that rewards its shareholders year after year. Target's dividend payments come in March, June, September, and December, which fits perfectly into our strategy of receiving monthly income from dividend stocks. So, if you're looking for a stock with strong growth potential, a legendary dividend track record, and a compelling turnaround story, Target deserves a spot in your portfolio. It's a blend of reliability and future growth, making it a great choice for investors who want to grow their wealth while enjoying steady income. So there you have it, 3 rock-solid dividend stocks that can help you create a consistent monthly income stream while positioning your portfolio for long-term growth. Whether it's Merck with its steady pharmaceutical strength, Starbucks and its global brand power, or Target's exciting turnaround story, each of these stocks has the potential to pay you while they grow in value. By combining these 3 quarterly dividend payers, you can ensure that you're getting a paycheck every single month from your investments. And remember, the real magic happens when you let those dividends compound over time, reinvesting them back into your portfolio to grow your wealth even faster. Now, I want to hear from you. Which of these 3 stocks do you like the most? Or is there another dividend stock on your radar that you think deserves a mention? Drop your thoughts in the comments below. I'd love to get the conversation going. And don't forget to smash that like button if you found this video helpful. If you want to keep learning about building wealth through smart dividend-paying investments, hit subscribe and turn on the notification bell so you never miss an update. Thanks for watching, and I'll see you in the next video.